Let's bring you the markets update now. And the blue chip top 40 on the Johannesburg Stock Exchange closing 2% higher on Monday, while the broader all-share index also saw a near 2% higher close. The rand also slightly up against a weakening dollar after spilling on the back of uncertainty over the U.S. Treasury yield and interest rate outlook. Joining us now for a quick markets update is Grant Nader, a senior portfolio manager at Benguela Global Fund Managers. Grant, thank you very much for your time. Let's kick off the conversation with what's moving the markets this Tuesday morning after the JSE saw a close slightly stronger yesterday.
Good morning. We indeed saw an excellent move yesterday on the markets, and although it's been a quiet start this morning, we've held on to most of those gains, and all signs this morning are pretty encouraging. Markets are consolidating these gains, which were of course driven by positive comments out of China, further stimulus to come there, and some easing of expectations around the rates outlook and the CPI data that we've had. However, we have got a lot of economic data and inflation data coming out this week out of the US and Europe. So there's still quite a lot of uncertainty as to how we move forward from here. But I'm expecting a fairly solid continuation of today's trade.
Let's quickly launch into company news. Thungela concluding its transaction to acquire a controlling shareholding in the Ensham. You'll explain to us what that is and whether we are pronouncing it correctly. How are the markets receiving this news?
Ensham, so it's basically been received. It's fairly neutral. It was known that this transaction was about to conclude, but on balance, it's strategically a good move from Thungela. This is a thermal coal mine, and they produce about 2.7 million tons a year of thermal coal. It is really in the sweet spot of what Thungela understands and what they do, and of course, it opens up greater export opportunities through the Newcastle port. And so I think it's a good move. I think it will be well received. Ultimately, it's a function of where thermal coal prices go as we move into the European winter. But the outlook is fairly positive. Ensham produces at around $110 to $120 a ton, and the thermal coal price at the moment is around 135 to 150 expected over the next couple of months. So on balance, it's looking good for them.
Let's talk Master Drilling. They saw a 5.7% jump in its headline earnings per share for the 6 months, which ended in June. What's driving that performance?
So Master Drilling is a very nice, well-diversified operation. They have a number of operations in the US. So the dollar was, obviously dollar operations supported that. They've diversified into some asset-light businesses in their mining support services and data intensive, and they've added layers of technology to their mining support services. And of course, if you translate that 5.7% dollar return into rands, they actually delivered around a 25% increase in earnings. So a very solid performance from this company, although revenue increased by 12%, so it does highlight some of the cost pressures they were facing in converting the revenue into profits. But I think as inflation eases, it does position them well for their strategy going forward.
Let's talk Murray and Roberts. They saying that the financial year end to the 30th of June has been the most challenging. They saying this in their trading statement. What headwinds is this company facing, and the subsequent results that are expected therefore?
It's very difficult to believe this was a company that was trading around 14 Rand only a few years ago, subject to takeout offer. They're sitting at 66 cents a share. They're really struggling with their Australian operations. There's been some restatements of discontinued operations, increasing losses. They've swung to a big loss this year. It is still a company that has a 14 billion Rand order book, but the construction industry is proving to be incredibly challenging to convert orders into profitability, and I don't see Murray's outlook improving in the near term. They've got a huge amount of headwinds that they need to deal with, and I suspect that the earnings are going to come out. They're going to be tough, and they're going to be struggling on a cash flow and profitability basis for the rest of this year, is what I expect to see.
as we wind down the conversation, Grant, let's talk some economic news. The Standing Committee on Finances has opened several pieces of financial legislation for public comment. Quickly talk us through what some of those are and, importantly, the implications.
Well, there's actually 5, but the 2 that stood out to me is they've opened comment on the solar energy and renewables tax incentives, and I think that's important. I think it has stimulated a significant amount of economic activity under the surface, and I think it's really helped South Africa, so I'm hoping that the positive contributions come through there. The other one is around the 2-pot retirement system, which enables South Africans to access some of their retirement savings earlier than normal and monetize that in a cash form. Now, that obviously has positive and negative implications. One, it could actually end up seeing people with less money at retirement, but the other side of it is you may be incentivized to save more earlier with not having the fear that you won't be able to touch that money until you retire. So that 2-pot system is quite big news in our industry in particular. I think it's a positive move if implemented correctly. So I'm looking forward to that. And there were a number of other measures, but those are the 2 that stood out to me.
Let's conclude with some 900 businesses that have closed shop in South Africa this year alone. Will things get better anytime soon? Yes,
so obviously that is a very unfortunate number. It's not something we want to hear. What is of note is a large number of those liquidations are voluntary, which is a good thing. And on the other positive spin on it is it's 15% less than we had this time last year. So what it suggests is while things are tough, they aren't quite as tough as we saw in the post-COVID fallout. And I think if we continue to move into an easing inflationary environment and we start seeing this confirmation that rates have peaked, some economists are looking at a rate cut in the first quarter of next year, even perhaps in the second quarter at worst. We will see some easing of those pressures, and I suspect we may have already peaked in terms of the liquidations and bankruptcies.
Grant Nader, thank you very much for that markets analysis. He is a senior portfolio manager at Benguela Global Fund Managers.